Welcome. Let's get right into it. You know what it is. Trade breakdown on USD CZK for a nice 345 pips. Yes, I know it says 3,457, but depending on the broker and the amount of digits to the right will depend on how this number looks. We're going to say that this is 345 pips because that's what it ended up being. In this video, I don't know how you've been taught to draw your support and resistance zones, but in this one here, I'm going to show you how I do it. I think that it is the correct way. As a matter of fact, I know that it is the correct way. Let's do this multi-time frame analysis and structure the right way in order to understand how we found this trade and was able to take advantage of it. We're going to go back and we'll hop on the monthly time frame. On the monthly, not really too much to notice. If we do look at it, yes, we have just made an impulse to the downside and we are coming back for the retracements. Yes, we are at previous structure support that should now be turned resistance once again. I know in the last video, I did say you want to wait to have all of your time frames in alignment, but that is to give you the best probabilities for someone who isn't as experienced in the market. But there are certain times where you can take a counter trend trade if you know what you're doing. For this monthly, what do we have so far? Really, let me go ahead and stun on y'all so y'all don't think I'm talking crazy. Really what happened is the market came back down in this zone perfectly after we exploded to the upside, and we can talk about drawing our support and resistance zones right now. So what you want to do is, if you're looking for some sort of support, so you're going to be taking your zone at the top of some previous candles or something like that, you need to take it from the body to the top of the wicks, and this will give you the best zone for you to look for the reaction to happen that you want to see in the market or don't want to see, for the reaction to happen. So as you see right here, we had price coming back in it, and then immediately we rejected this zone, exploding to the upside. So this is what we're starting to get, and we're also starting to create this pattern that we have here. We have a left shoulder, which was identified by this level in the market. We broke it to the downside, and we're now starting a clean retrace without breaking structure or showing any different colored candles on our way back up here, which then will return this market to be bullish, and we would look for the retracement and explosion to the upside once again. So that is what I was going through, which is a little advanced. That's why I was saying I want y'all to think I'm crazy, but you do want to have the time frames in alignment, and I will still display that here. But this was a little tricky trade. You can see there was a lot of anticipation, which is not highly recommended, but let's move forward. Let's progress. So we are starting to make our retracement to the upside. If we do take out our Fibonacci's on this, we can see from the high to the low on this impulse, we are coming back and getting rejected by the 50%. Ideally, you would like to see the market come back to the 618 golden Fibonacci zone, which is perfect in a perfect world, but you don't always get that. You could look for the continuation now, but let's go ahead and continue to talk about how to draw our support and resistance zone. And as you can probably notice, this is probably one of my favorite patterns in the market. If we take a look right here on the weekly time frame, we've had the market make a move down, find a level in the market here. We did come all the way down, and then immediately, without creating any candles of a different color, explode back to the upside, coming back and retracing, and we are currently now retesting this area. So if we took our zone and we draw it from the body to the wick, this is the zone that we get right in here. Let me zoom in. Right in here. So we can look for this area to act as previous structure support on this side, and for it to act as support once again on this side. So now that we've broken it to the upside, we can look for the market to come back into this area and find a rejection and have some momentum to the upside. And that is on the weekly. On the daily, what can we identify? That we are just having the same most common pattern in the market. This is the TMCP right here. The most common pattern in the market is a move to the upside or downside, some sort of retracement, and then a continuation in that direction, and we just want to take advantage of that move. So let's keep our charts clean. I'm going to take some of these zones off. I think you've gotten what I wanted to talk about in this video. You want to take it from the body to the wick, from the body to the wick, from the body to the wick. That's how you want to look for your zones. So now that we've seen that we've had our impulse to the upside, and this is on the daily time frame, if we do take our Fibonacci, you know you want to have the market come back to at least the 382, which is the first level of support that the market will incur, because that is just what the Fibonacci levels are. They're just levels of support in this case that the market will incur or encounter before it continues its trend back to the upside. After we've exploded to the upside, we just want to see a continuation. So now that we've gotten the 382 touch to at least one of these zones, because we know for moving up in the market, we need to make higher highs and higher lows. So when we do make that higher high, it's only logical to wait and be patient for the higher low to actually present itself, identify itself, complete itself before we start to look for the next next higher high. So you need to wait on the retracement. Be patient, guys. That's really what I want to get through in you. Be patient, be patient, be patient. Once you understand structure, you'll see that now that we drop down to our entry time frames, we've went through our directional time frames, our monthly, our weekly, and our daily. We've gotten a pretty good idea of where the market is headed. Now we've dropped down to our entry time frames. We want to see the structure on our side. We did have bearish structure. The market was creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and then we started to create equal lows. We came up around here, you know, highs are getting higher. Now higher lows. Now we're creating higher highs. Now we're creating higher lows, and we've just closed and broke above this structure area where we are creating a higher high once again on this market. So now on our entry time frame, we are just a hair, I wouldn't really say late, but we are just right behind, because this probably could have been the impulse that would have been a good one to get in on as well. But nevertheless, the market just changed its structure. So we are early in this trend change on the 4 hour. If we do drop down to the 1 hour, because I don't think I went any lower than the 1 hour, you can see that we finally got the break above, which is what we were waiting for. And that's another thing, man. You don't want to be first. You want to be right. There's nothing, you don't get anything special for being first into a trade. Actually, it's higher risk because you won't have as many confluences in that trade. If you're getting in early, it's a really high risk, high reward, of course, but you really want to be right, man. You don't really care about being first. In this instance is a good example right here. I didn't really care about being first because I could have gotten in probably in any area down in here and probably still had a winning trade and a even better risk to reward than a 3.5. But I'd rather be right and get a solid 3.5 risk to reward than to gamble and try to get in early for a 5R risk to reward and probably lose the trade. So if we do look at the hour, on the hour time frame, we did have the market that we were waiting for a break above this area, above all this zone in here. And once we did get that break above, we were just looking for a nice place to enter, which is previous structure resistance. That should now act as support on this side with our stops below the low on our entry time frames. And then we went to our higher time frames and found our target somewhere right up in here. We had the highs. So right before the highs were probably reached, wanted to go ahead and get a nice TP met with a nice 3.5R. There's only one thing left to do, and that's sit back and let the trade play out. So once we did identify everything and have the trade set up, just let it play out as well, man. Go ahead and drop me a thumbs up if you are learning anything from this free educational content. I'm trying to just show you the same things over and over and over and over that aren't complicated, simple concepts, just to show you that trading doesn't need to be difficult. It just needs to be consistent. You need to find something that you identify with, some strategy you identify with, learn it, understand it, and just do it over and over and over and over. And then you will realize that it was never the strategy and it was always you in the end. If you need a strategy that I know works, go ahead and check the description. I'll probably post it on the first pinned comment down there in the comment section below. It is a link to the program, which I think is a very full program. It shows all the things in here that I'm talking about on my YouTube channel plus more. The YouTube channel is just the free content. So within the program, you know, there's going to be some exclusive content that you can only get there. And let's let it play through. We are starting to get some sort of consolidation right around our entry. So just letting it play out. Trust where you put your stops, trust where you put your targets, man. We weren't risk free yet. I think that this happened. And once that happened, came close to the stop loss, as you see. But once again, if you put the stop loss where the stop loss needs to go, in this case, it needed to go below the low, which was down here. If the market came and broke my stop loss, I don't want to be in this trade because now it's telling me that it's breaking lows. So I don't want to be in a buy. But since the market came all the way down here, got rejected before it hit my stop loss, which it was failing to create a lower low and just keeping with the trend, creating higher highs and higher lows. Our stop loss was safe. My stop loss was safe and price rejected from there. And then I went risk free because I wasn't risking it no more after that. So we just let it play through. As you can see, it comes back a little bit, but we're risk free. So you know what I say, it doesn't matter. We don't care. Now we're starting to get some break above structure, really risk free. And you just forget about the trade and just let it play out, man. So there, a nice 3.5 risk to reward, gaining about 345 pips. I don't mean to spoil it, but it's gonna hit. It did play around a little bit, but yeah, just really understand that you're taking your structure from the body of the candle to the wick of the candle. And that's where you're gonna identify your support and resistance levels, your structure levels, your support and demand levels, whatever you wanna call it. Price did come back a little bit, but once again, risk free, it don't matter. TP reach. That's it, man. Like I said, said, if you are enjoying these free content, these free videos on YouTube, go ahead, drop a thumbs up. Make sure you are subscribed. I really appreciate that, man. We've been growing. Other than that, hope you have a profitable day on and off the chart. And until next time. I holla.